Today we have Alan Pangbourne from Chesapeake Gold Corporation. Thanks for joining us, Alan.
Morning, Sean. Good to be here.
Good. First, let's just kind of get an overview of the company and tell us about yourself, Alan.
Sure. So Chesapeake Gold is the company. Our primary asset is a massive gold-silver deposit in Durango, Mexico. Over 20 million ounces of gold, 560 million ounces of silver. So whenever anybody does a scan of large undeveloped gold-silver deposits, we're in the top 10. My name's Alan Pangbourne. I'm the CEO. We took over management of the company about 18 months ago. Prior to that, I was in BHP, Kinross, used to be the COO at SSR Mining when we took it from a single asset producer through to what it was when they backed it into a laser. That was a great ride. Sold Guyana Goldfields in 8 months when I took over that for over a 300% premium.
Wow.
So it's been an interesting time in the industry, and this is my next venture.
Wow. So how many years would you say total you've been in the industry?
40, I guess, just.
40? Since you were 10.
No. It's that makeup.
That's right. Wow. Well, you've got some deep experience. That sounds pretty obvious. What about the team? Talk about the team in general and how they differentiate them from the rest of the industry.
So I think we're a builder and operator team. My background, my CFO's background, and others in the team have really been developers and builders and operators of projects. We're not a discovery story. We're not an exploration company. We know that. The investors, if they look at us, can work that out pretty darn quick. Several of us have worked together before. Bring a team back together and go and do it again. Yeah.
Excellent. So tell us about your properties and where they are.
So like I said, the main property is the Metates project, which is massive, as I mentioned. It's in Durango. Durango is not a bad spot to be in Mexico. I worked there before when I was with SSR, got some great contacts in town there. And so understand the people, understand the culture. I lived in South America, we'll call it Latin America, worked in and out of Mexico as well for 22 years. Married to a Chilean lady, so I have online help when it comes to understanding the Latin culture. Fluent in Spanish, so it's a great place to work. When you understand the people, understand the culture, the processes, it's really a great place.
Interesting. Okay, so you've got those properties. Tell us about potential future opportunities or things you're looking at.
So our story is different to most. When we took over management, we backed in a private company that I owned a reasonable amount of, and we've got a technology that allows us to heap leach sulphides and then get the gold and silver out. What that means to the industry, once we can prove that it all works, it is significantly lower capital cost. The previous project for Metates was going to be $3.5 billion. Our capital cost estimate is $360 million.
Wow, 1/10.
That's 90% reduction in the capital cost. The process will use, compared to the alternative process, which is an autoclave plant, 90% less power. It'll use 90% less water. And there's no tailings dam. It sounds like nirvana, not quite, but it's close. And that is huge. It will disrupt the industry. Yeah?
Heap leaching.
Heap leaching. They've been heap leaching gold oxides forever. They've been heap leaching copper oxides forever. They've been heap leaching copper sulphides, and I built one of the largest in the world in Chile back in 2004 at Spence. And they heap leach sulphides and recover copper. We're taking all of those concepts and applying them to the gold industry. We've got a technology that allows the sulfides to oxidize in that environment and then recover the gold and silver.
Interesting.
It's not been done before in the gold industry, but it's been done for 30 years in the copper industry. Like I said, I built one. I actually saw one of the very, very early ones in the early 90s in Pudahuel, just outside of Santiago. So we're really confident it works. Yesterday, I guess it was, we put out a new press release And for the first time, we were able to share with the market a proof of concept test results on the Metates ore.
Wow.
Yeah. And so we were able to show, one, we can oxidize the sulphides. When we do oxidize the sulphides, we can still get the gold and silver with a standard cyanide heap leach. So we're on our way.
You're on your way. First
so
step.
exactly.
Yeah,
this is a step-by-step process, right?
Yeah.
You don't just wake up in the morning and build a new mine. You don't wake up in the morning and run a marathon.
Yes.
Right? It's step by step, piece by piece, put the jigsaw together, and then build it, deliver it, and operate it.
Wow. I mean, if you do perfect that, you could end up getting royalties for the IP.
Yes, as well.
Yeah, that's excellent.
So we've probably got two streams of where we can go in the future. One is to continue moving forward and build the project. But there'll be a time, just like there probably was 3 or 4 weeks ago before I put the press release out. Obviously, I've seen the information. I've got all the data. So there'll be a time where I'm confident enough that I can go looking for similes to what Metates is, right? And start looking for other projects to add into the portfolio to apply this technology. Because when you sit there and look at how this will shift the economics, this is the same as when they started using heap leaching for gold oxides back in the late 70s, early 80s. And I was on that horse race too. If you Google me, you'll find a paper that myself and a guy called Randy Piper wrote back in the, I guess it was mid to late 80s, on a heap leach in a little town in Australia called Marvellock. At the time, it was one of the largest agglomerated gold oxide heap leaches in the world.
Wow.
Yeah, it wasn't very big back then. We didn't build them as big as they build them today. We were getting 90% recovery out of a heap leach, which is unheard of.
Yeah.
Nobody believed us. So we actually went back and drilled it to sample it to prove that we got there. But you know, so I've been playing around with heap leaching in particular, but across industries, and that's the other thing that we're bringing to the gold industry is this experience from the copper industry that's been heap leaching sulfides for 30 years, from the gold industry with the heap leach, oxide heap leaches. I've been playing around with it since the mid 80s. Yeah. I built a unique heap leach operation in Tintaya in Peru back in 2000, where we were heap leaching a copper skarn, which is horrible stuff to try and heap leach, but we got it all to work.
That's really interesting.
Economically. So I've been doing that a lot in my career. This is just the next one, right?
Right. Interesting. Yeah, it's proven in the past, some tweaking maybe to make it work for regular gold. So that's
it's tweaking, and it's taking an application that is well proven in a different, I won't say industry, but a sector of the industry.
Yeah. Yeah.
Right.
What would you say to consumers when they hear the word bleaching? What is the environmental friendliness of this process compared to?
Well, as I said, if you've got a process that's using 90% less power, that's less carbon dioxide emissions, right? If it's using 90% less water, that's great when you're talking to the local communities, because most communities, their biggest concern is clean, available water for farming, for consumption, and things like that. So just by using less, right? You know, if you really want to have an impact on the environment, use less.
Yes.
When energy, water, whatever, right? And then you add to that, this doesn't have a tailings dam. Local communities are rightfully so, in some cases, scared about having a tailings dam near them because of some of the events that have happened. And they've been happening for a long time and they haven't stopped. So if you can change it to just a equivalent of a waste dump rather than a tailings dam, it's a much lower risk installation when you get to closure and when you're going to leave, right?
Interesting. Okay, let's shift gears for a minute. You definitely have some great strengths, it seems, for your company. Let's talk about potential weaknesses of the company and how you're addressing them.
I guess the biggest weakness is doubting Thomas, right? Because it's new. The world doesn't like change and new, and it takes a while for people to adopt new technologies. Eventually they do, and some get adopted really quickly, others take a long time. And if you then look at the mining industry, they're the conservative of the conservatives, right? We used to joke, it's not proven unless it's been operating for 100 years. So that's probably our biggest weakness is nobody believes until they can see it, touch it, feel it, right? And so again, it's just step by step. Okay, look, here's proof of concept. Tick. We started off, here's the concept, this is why it will work, this is what we're going to do. Right, now we've done that, you've got your proof of concept. Now we're doing the next step, which is how do I tweak it so that I can get to where I want to be for recoveries and economics and things like that, right? And I've always said this isn't a question of will it work, it's a question of how long will it take to get to the result I want, right? And so we're now clearly on that, how long will it take, right? Because I can now show there's the results, guys. It oxidized and the gold and silver came out. So now, that's really the biggest first hurdle. Now it's just convincing people that, hey, this isn't smoke and mirrors. It's real. It will work. It is working in the lab. And so the same sort of weakness. Yeah, it works in the lab, but will it work in real life? Over the decades, we've got a lot better at working out how to scale things up. I often get asked, are you going to build a pilot plant? And one of my answers is really, why? Because a pilot plant, you take one sample, you test it once, and then you say that represents what you're going to do for the next 30 years. That's not right? You're just betting the entire design and future of the project on one sample.
Yeah.
That's not right. What we will do is we'll build what they call a geometallurgical model, which basically means I take lots of samples, understand how different locations, depths, types of rock all behave, and then put that information back into what people hear about all the time, a block model. So I'll have geologic and metallurgical information, which gives me a much better indication of how that piece of ore is going to behave when I put it on the pad in this year or this month going forward, and you can build that up. That's a way better prediction for the future, the model that you can use, than one sample once from one location.
Absolutely.
Right?
There's so many variances, so you got to account for them. So.
That's right. It's understanding the variances. Because the one thing that I've always seen that gets you, it's not how did the plant work on the average ore that you tested. It will. The problem is the stuff that you dug on day one doesn't look like what you tested. The stuff you dug in 5 years from now doesn't look like what you tested. And you got to tweak the plant or whatever. And so sometimes a project will fail in the first year of operations because it never worked. Because what you fed it wasn't what the composite that you used for all your test work was.
Interesting. They didn't plan for the future enough.
You got to plan for the variability in the future.
Yeah.
Right.
Interesting. Okay, that's a good point to let potential investors know when they look at companies is how much variance is in the sampling and things.
And don't get me wrong, pilot plants have their place. Right? If you have to produce bulk materials for marketing purposes, or if you've got a product that has a very big secondary product value and you need to do test work on that to prove that actually works. So copper moly is a common example where you have to float enough copper concentrate to then do the moly test work. So to do that, you might use a pilot plant. To produce a bulk concentrate, you can then do the next stage of test work. So they do have their place. And we used to, for instance, when we were building these big mills, we would run a pilot plant, scale it up, build the big mill. We now understand all of those scale-up factors. Nobody does it anymore. Right?
Yeah. Okay. Well, let's shift gears for a minute, talk about the financials and how much runway you have if this concept, takes long to come to fruition. So,
So we're in a really strong position. We've got 30 million Canadian in the bank or thereabouts, 29 point something or other. Yeah. We had 35 million in the bank on the 1st of January 2021. So that gives you some idea of how much money we're burning over time. So that gives me plenty of runway, which in the current markets is great. I'm not sure I'd want to be trying to raise money in the current market. So financially we're strong, no debt, clean balance sheet. Cash, that's the financials, that's about it. So we're not burning a lot. Moving forward, the focus is primarily test work and studies. Neither of those are particularly expensive. The biggest expense is usually drilling. Yeah, and we've pretty much done all the drilling now. So financially, we're in a good position. Yeah.
So what's your shareholder mix in terms of institutional versus private, public, and insider?
So the shareholder mix is predominantly retail. We do have 4 or 5 major shareholders. The biggest one is Eric Sprott, personally. So it's not Sprott Inc., it's Eric Sprott's money.
He's got a lot of choices.
He's a gold and silver bull, and everybody knows that. And he invests across the whole stream of different types of assets in different locations. So he put in $15 or $20 million in August of 2020. So before we did the deal. And so he put in, I think it was 15, and Peter Palmetto, Sun Valley is our other major shareholder. Eric's got 8.3, I think it is, somewhere in there, million shares out of 67. So what's that, 12, 13% or something? Peter Palmetto's got 7 point something change, so he's a similar size shareholder. I personally actually have almost 7.45 million shares. So I own 11, 12% of the company. So I think that qualifies as skin in the game.
Yes.
Yeah. So, I'm all in on this one. Yeah. Which is good from a shareholder point of view, because when people start raising money and getting diluted and all of that, I'm diluting myself as well. Yeah. So, having the money, not having to go and raise money, certainly in the current market, certainly with the current share price, is a good thing for all of the shareholders. Yeah. And then after that, the founder and ex-CEO president, Randy Rifle, he has about 4.4 million shares. So between the 4 of us, I control a few others through friends and family type arrangements. We have about 40% of the company, and the other 60% is scattered through shareholders that have followed Randy Rifle since Francisco Gold days, 20-something years back. And there's guys that I know that have come into the story, and there's a bunch of retail guys that I talk to occasionally.
Interesting. So you have some people that have owned the stock for a while. They're probably going to keep it. They're well invested. When did the stock go public?
Oh, geez, I don't know. 2009, 10, somewhere around there.
Excellent. So 12 years. A lot of you guys have been there probably from the early days.
A lot of them came in from even before that, because
Yeah.
it was a sort of spin out. I'm not sure of the exact history of how they went from Francisco Gold to Chesapeake, but they did.
Interesting. So if and when you do need funding, what would be your sources, do you think?
I think, the next time we need funding, assuming that we just follow the track of do the met test work, do a pre-feas, do a feasibility, do the permitting process, construction decision. With the $30 million, we believe we've got enough to get us to need money for construction. Okay. So it's a different type of financing when you get to that point. So, we look at the more traditional things. There may be an equity raise, certainly some debt in the mix, may or may not look at a royalty. I'm not a big fan of royalties. Some of the streams are getting a little better now where you can cap them. And so it's X amounts of ounces. It's not a perpetual stream forever and ever. I've seen what streams can do to your economics. When I was in SSR, we had an asset, well, they still do, the Marigold mine in Nevada, and the royalty streams on that were just amazing. And there were months where the royalty checks were bigger than the checks we were getting as operators.
Wow, yeah, it can get lopsided in the long run.
And it gets lopsided, and you sit there and go, we're a contract miner. If I want to be a contract miner, I'll go start a mining contracting company. Yeah.
Interesting. Yeah, it's so attractive initially.
And it has long-term implications if you don't cut it off.
Interesting. So what would be, if everything's going well, would you have any future exit strategy in mind, or merger, or something?
Like I said, there'll be a point in time where I get way more confident, maybe overconfident in we've cracked it, we've got a solution, and then I'll go look for similes. All right?
Right.
When I do that, we'll start looking, how can we do a deal? Yeah. Again, I'm not a big fan of just handing over cash. So you sort of, okay, do we structure it? The reason we would be looking at an asset is obviously because we see more value than where they're trading at. And so you start structuring it differently so that they share in the upside as well. And so
more of a joint venture.
Joint venture or share swap or something like that. And then potentially would need some extra cash to go alongside that deal so as you can progress both assets at the same time. As far as exit plans go, I said at the beginning when I first took over, I want to build this. I want to repeat SSR. It was fun.
Yeah.
Right? And so get the first one and then build it into a multi-asset company. One asset companies are tough. Yeah. When I joined SSR, it was a hell of a tough ride at the beginning. But once you get 2 or 3, it gets a lot easier. Boring is good. Yeah, certainly from an operation point of view. Yeah, you don't want to be firefighting all the time. So long term, I'd love to see Chesapeake become a good mid-tier producer. If there's places where the technology is applicable that we don't like for other reasons, we can put a royalty stream and a technology agreement in place and help them that way and get a different cash flow stream from that option.
Excellent. Well, you've covered a lot of my questions along the way. You've got some definitely lower costs and input costs based on your technology, so that's great to hear. Kind of last comments or input would you like to give audience?
Just have a look at the press release, have a look at the presentation that we updated and put up on the website yesterday. That was a key milestone for us to be able to get that proof of concept out into the public domain, rather than dancing around it. This will disrupt the industry for sure.
That's exciting, Alan. Thank you for your time.
No, thank you, Sean.